Okay, guys, I guess we're live now on YouTube. Anybody can confirm? Great. You can hear me also on YouTube? Okay, I will close it because I'm getting an echo. I'm getting a feedback if I open it here. So it's closed. I don't see what's happening there. I only see my charts. Okay. Welcome to everybody. How many people in YouTube? I can't see. Can somebody tell me how many people in the YouTube live stream? Good afternoon, traders. Welcome to these daily webinars that we're doing. I hope you're finding them interesting so far. Not a lot of people coming to them because we're getting only about 100 people or so. I hope we can double that, right? I hope we can get much more than that. Yes, 83 there and 73 here. So it's kind of like not a lot. So I hope we can increase that by a huge amount. You guys need to spread the link, make sure they can, people can get the link. I will try to create a single link. The problem with creating a single link for a long period is I don't know the exact time. And I can't have a fixed time when it's going to do because I'm not sure how I'll be able to manage that. But if you're in my YouTube or on the Facebook, you can get the link daily, right? Let's go. Today we're going to be looking at Aussie. Let's look at Aussie. Give me 1 second. Let me just set this up. Let me go get a new one for the Aussie trade. Oh, okay, don't worry. You can do Aussie. And let me go to the daily. So this is the Aussie chart. Let's start in the monthly so you guys can have a bigger picture of what the whole thing is doing. So this is where we are on the Aussie chart. If you know anything about where this came from, it came from the top there, right? Something like this. I think we had some, not too sure what this was in, but there was something like that, right? And then Aussie made a move up, made a move down, made a move up, and is making another move down. Well, if you look at this whole structure, it looks like a three-wave up. And we have made one wave down so far, right? So the question is whether the wave to the downside is over, which we don't know, right? You don't know whether the wave to the downside is over. So this piece going up could either go up all the way there. I don't think they will break the top because we're going up as a correction and then we're going to come down. Or they could come down a little more here, then go back up and then come down. So to know whether it's going to do that, we'll have to analyze what's inside of this. And if you analyze what's inside of that, you will know. So let's go to the weekly. So on the weekly, you can see this move coming down, and we're making a very big, looking like a flat corrective structure here, which means we're expecting one more down, break the low, maybe give you some kind of a divergence there, and you start to look for this to go back up. It's going to go back up as a corrective structure, come back down before you start to get any big moves. So you'll be in a sideways move for about a couple of years. 10, 15 years, you'll be in a pretty much big sideways move. So the question is this correction to the upside over? And there's a good chance that it might be over and we're actually heading down for that move to the downside. We don't know that for sure, but that's a very good chance. So we will go and look into this piece here. But before we go and look into that piece, as usual, I like to show you some of the charts that I've shown in the past. And that works pretty good. I think we'll see them on the daily, not on the weekly. So on the daily, you can come here. And you can see some pretty nice charts. I think there was one. Well, there's one here. You can see that can be simpler than that. I think all of you can learn from that. Right, showing you very early how this wave structure works and that, yes, it's possible this is going to go for a downside. And it did make a down move. We started to correct, and once we got into that correction, there were some nice structures here we're looking at. Possibility for this to do that and then fall, and this one was very perfect. That one was close to perfection. It did go up, did come down, go there, came down back to the bottom, right here, right? And now we're in an up move. 1 second, guys. Let me just lower the volume of that, right? So, and now we're in an up move, right? So you can see, well, at the bottom here, we did figure out that they should go back up. If you remember, you look at this one, there's a Christmas one there. That one was done in December there, and we were looking for this to be an ABC here. an A, a B, and a C, and for this to go up. At one point, we did thought that this was going to make a triangular pattern here, right? Because this started to look like it didn't break the low. We thought it would break the low and then go back, but it didn't break the low. So we were looking for kind of a triangular pattern, which didn't make, and the C wave also was not as aggressive as that, right? The C wave becoming much of a more complex C wave going up, right? You can see that it didn't become such a very smooth wave. It became more like this, and we have more to that. I think we have more to that. Yeah, the C wave went up, but not the way we thought it would go up, more like a very, complex pattern. But the basic aim is that you can understand that patterns work and you can forecast these charts. Now, why are these forecasts so accurate? Most of them, right? Well, it's because of the way we look at structure. It's the way we identify what is a single wave, so that you could put those waves together to actually make a bigger wave and a bigger structure. So now we are here, and the dilemma is, are we going to break out, or is it going to go back up for one more? Based on what we have, there's a higher probability for it to break out rather than to go back up. So there's a higher chance right now that this thing could make a correction right here and drop rather than continue to go. So if we're going to look into this chart, and we will come into this level, go to the 4 hour, and the only possibility in this structure that leaves for an upside is one more impulse here, and then it falls. Right? That's a possibility. The second possibility is that they actually just make a correction here. I can see this probably breaking up here, making a correction, a corrective structure to the upside, and then dropping to the downside. This is a higher probability. I think this is more what we are looking for, the possibility of to make a correction and drop rather than to go back up for another impulse. But either of that happen, you're going to get a buy trade to the upside. So you can take the buy when you get the buy set up. You take the buy, put the buy to break even, and let it do what it has to do. You can follow it with your stops as it goes up. If it's a corrective structure, you get 20 pips and 30 pips or 50 pips, or depends how high it goes, and you start waiting for the sell setup. If it's an impulse, you're going to follow it all the way to the top, right? So which is going to do? Well, you don't have to guess. That's a good problem of understanding wave analysis. You don't have to guess. You understand what the structure could do. You know the possibilities, and you wait for those possibilities to play out. And when those possibilities played out, you watch what the structure is. You figure out what pattern is going to make. You understand whether the pattern is complete or not. Because, you look at it and say, well, okay, this is an incomplete pattern. That means there's more waves within that pattern. Or this pattern is complete, which means we can be changing direction, right? Those are the things we do more in-depth when we do in our trading room, right? So can this thing go up? Well, wait for the breakout of this. Let this thing break out, make a correction. And when it does this, you start buying. You put that to break even. If the up move is going to be corrective, put it back in the 4 hours so you can see. If this up move is going to be corrective, you'll make an impulse up. You'll start to make a correction down. You'll make another impulse up, a correction, maybe another one. You'll get something complex like that. And then you're going to start to go down, right? So the move to the upside is going to be a little complex. Let me draw it like this. It's probably going to go up. You get into the trade. You get the trade somewhere here, and this pullback, it goes there, make another pullback, go, make a deep pullback, come back here, make another deep pullback, and then you look for your sell setup, right? Or this thing takes off, and you're in a wonderful trade to the upside. So which is it going to be? I don't know. Right now, I don't think this is going down much more. Even if this goes down, it's probably going to be something like this or something like this or something like this. Not interesting trades. For them to go down very far, you would really like to see that deeper correction and then the drop. See, that's it. That's all you need to know about wave structure in this to get good trades. So what I would suggest you do, wait for buy setups in the Aussie right now. If I'm going to take a, excuse me, if I'm going to take a sell in the Aussie, it will have to be after they break the structure, make the deeper correction, then I'll be going for longer term sells. Any trade right now to the downside is very short term. Not going to happen, but it's going to be very short term. They're making kind of a big correction here. Well, if they break out and they come back, we can look for a sell here. If they break out and make a flag, you look for a buy. That's it. That's your trade setup for today. Today, tomorrow, likely it's going to happen. That is how you do it, right? So, everybody, I think yesterday I stopped the recording and then take questions, but the people on YouTube were not happy. They want the questions. I don't want the YouTube video to be longer than 15 minutes, so we're going to take 5 minutes of questions. I'll answer the questions, and then we'll go. Any questions? If this falls, then the Euro Oz will go up. Yes, but this is not going to fall. So let's not even go there yet. And not necessarily that if this falls, the Euro Oz will go up, because if Euro falls much more than this, Euro Oz will come down, right? You understand that concept as well, right? It means Euro dollar could be falling pretty fast, right? If this goes up and Euro dollar comes down, oh, you want to trade the Euro Oz to the downside, right? Euro Oz is setting up for a correction to the downside or a drop to the downside, one out of the two. Why pattern works? Good question, by the way. So we'll take that question. That will take a few minutes, and then we'll go. European views, we'll do European the next day, and US CAD views, we'll do them the next day. We're not doing a webinar here on all the charts, guys. I'm trying to give you a little education on one chart and why they work. So let's go. Good question. Why does pattern works, right? I'm not sure I'm supposed to be giving you guys all these right now because this is what I do in my class, but I'll give you anyway. Think of it this way. What do you do in your life? You wake up in the morning, let's say 6 a.m. I don't know who wake up so early. I wake up 4 or 5 sometimes, 6 a.m. Right? You have to have an A here, right? Then the M. 6 a.m. You do your, you do your toiletries. You take breakfast at 7 a.m. You go to work at 8 a.m. You work for 4 hours. You get a 1 hour break from, I don't know, from 12 to 1 p.m. Right? You work for another couple hours, and then you get another, then you go home again and you do a number of things, right? You repeat that process, and then you sleep for 8 hours, and then you repeat that process. Let's say we take that process and put it on a chart, on a 24-hour day chart. After 1 week, we hand that chart to somebody, and we said, okay, this is Mr. X, and this is what he does. Can you tell me what Mr. X will be doing Wednesday at 12 p.m. or Wednesday at 7 p.m. or Wednesday at 4 a.m. in the morning? And what are the likelihood that that person will be 99% accurate in what he makes in the forecast? Because you live in a pattern, right? Your life is a very distinctive, well-structured pattern. And rarely people change that. Anybody change that? You don't change that, right? Very few people change their habits and what they do and their time graphic and all of that because it's fixed, right? So, there are more to that. I'm just making it very simple. So think of currency traders. These are currency traders. Forget who is doing it, whether it's bank, hedge fund. Think of currency traders, right? And they're trading the yen. So they want to buy a lot of yen. You would assume that more of the yen transaction will happen when either the Japanese market is open or the US market is open. Why those two markets? Well, I think the biggest trader with Japan is the US, which means the US banks will probably be able to convert yen without the Japanese banks, and then they will do that transaction with the Japanese banks the next day. So you will kind of have two sets of time when those transactions happen. And when would these banks do the transactions? They will normally do it the same time, almost the same day, almost the same kind of transaction weekly, because they have the same clients, right? These banks have the very same clients who are buying and selling the currency because of their import-export habits, right? So you know what Toyota will export to the US, you know what Toyota will get the US dollar, you know Toyota will have to convert some of that into Japanese yen, and they will have to pay salary, you know when they pay salary, we know all this stuff. That is, if you want to go into the very details of what happens in that market, you can do that. But these are routine daily stuff that happens. And if you take that and you actually put it, there is nothing on the screen. Please, people, I'm talking. I'm not drawing anything in the screen. It's not frozen. Right? So if you actually take that and you put that on a chart now, right? If you take that and put it on a chart, do you think that the people will be still exporting goods on the same time they normally export? Do you think they will pay the salary the same day they pay? They don't just wake up and say, oh, let's pay salary today, right? They have fixed times when salaries are paid. They have fixed times when they make these transactions. And because of these very fixed habits, if you put them down, you get a pattern. That pattern is what we study. Now, the people who are converting currencies tend to manipulate the market for their own benefit, right? And that is part of their business. If you go and you buy a car, a used car for, I don't know, $400 or let's say $4,000, and 2 weeks after you did some work on it and you want to sell it back, you want $5,000, $6,000 in it. So you're going to put the price out higher and try to look for a client to sell it higher. That's what they do. They buy currencies and they sell currencies. Excuse me. So they want to make profit. And because of that, they will have to move the price. If they're buying, let's say they start buying at this level here, and they want to, sell it back, they will go sell it at that level. See that? When they sell at that level, what they would like to do, come back and buy it at a cheaper price, go back and sell it at the more high price. So let's say the value of the currency. Let's look at the Aussie, for example. Go back to the daily, because daily is going to be much easier to explain that to you. And this is the thing that traders get wrong. Most traders in the world don't understand this, because I'm going to show you and I'm going to ask. I should poll it, but I'm just going to ask it pretty easy. Anybody want to tell me between this and between this move here, where there were more transactions? In this move here, I'll put this as pink and I'll put this as yellow, this little piece in yellow here. Anybody want to tell me where there were more transactions in the market? In the piece that is pink, this piece here, in this yellow piece here, or in that pink piece here, where there were more transactions? Put pink for P for pink or Y for yellow. Most of you got it right. The yellow place is where all the transactions are taking place. In that pink movement, there are very, very, very little transaction. That is where they're moving away from the transaction zone so that they can get it cheaper, right? That's moving away from the zone. So that's what happens in an uptrend. What we see as an uptrend, is very simple. No, it's not supply and demand. Don't get that wrong. This has nothing to do with supply and demand. Supply and demand may work in a commodity market. It may even work in the stock market. It would not work in financial market, right? That will not. It very little has to do with supply and demand. I see people say that, but it has little to do with it. Because believe me, they have more supplies than you can demand. They have more to supply you than you can demand. But it has nothing to do with that. It has to simply making profit. So they create that supply and demand, if you want, by holding back, moving the price where they think it's good to do. So let's say all the transactions are happening in here. And the market drops like this. And the transaction starts to happen here. Two ways the market can go, right? The market can either do that or the market can do this. Everybody agrees with that? I think that's easy, right? That's logic. It could go one of the two ways. Now, if you know, here's a secret. This is the most important part. I want all of you to pay attention. If you know, and I said no, if you know that there is a distinctive pattern in here that will tell you whether it's going to go up or whether it's going to go down. Inside of this thing, there's a distinctive pattern that can tell you which direction it's going to go. Would you want to learn that pattern, to understand it, to be able to figure out what pattern they're making in there? If anybody says no, put an N. Exactly, and that's what we do. That is exactly what we do. We teach you how to figure out what they're doing in there. Because when we figure out what they're doing in here, we have an advantage as to which direction they're going to go. And not every time you see something that looks like a consolidation will continue to go with the trend, because trends do change, right? If you look at the Aussie right now, people may say, well, the Aussie is consolidating right now, right? You may look at this in a 5 minutes or a 1 hour and you say, oh, well, this thing is consolidating right now. It should go down, right? Easy. So how do I know that this thing is going to come? This wasn't a consolidation, right? Let me just show you this on the daily. This thing wasn't consolidating. This thing was dropping like crazy at the bottom here. How do I know that it's going to stop there and go back up? You notice? It wasn't consolidating. It was dropping like crazy. So how do I know that that thing is going to stop right around that area and start to go back up? See that? How did I know it's going to happen? Easy. We know the patterns they make. We understand the patterns they're making. And once we figure out what pattern they're making, we're saying, guys, Don't worry with that drop. We know what they're doing. They're actually dropping it to take it back up. So we are setting up for a buy and not a sell. Absolutely. Understanding the patterns that they make. And when you see a specific pattern, remember I showed you? When you see a specific pattern in here, you know the direction they're going to go. And I mean specific pattern. That means you have to be able to understand the patterns. Look at this one. This one is the most amazing one. That one is not this one. This one was a short one. I'm talking about the bigger one that fall. That was a short correction. The bigger correction was this one. This one here. This one is just perfect. How do you know that this thing is going to go up here a little, come down back here, go back up there, and then fall? I want you to watch it. I think we can do, we can replay the candles, right? So I'm going to cut the candles here, and I'm going to replay them slowly, right? So let's put this very slow, and we're going to put play. And you're going to watch that thing. This is too slow, right? Let's put it a little faster. And it's playing a little faster than that. This is too slow. Come on. You can play a little faster than that. Right? Watch how this thing plays out. Goes, break that top. It's going to come and break that top. And look what happens after that. Once it breaks the top, it took off. So how do we know that it was going to go break that top and then take off to the opposite direction? Right, I'll stop it. You know where it went. I just want to show you how it plays out. Stop this. Come on. It's not stopping now. I want to stop it. Yes. Good. Stop. So how do we know that that is a possibility? Because we know what pattern they're making. We look at the pattern they're making and we said, if we see them do this, be careful. Once they tag this low here, once they tag that top there, they're going to drop it. That is wave analysis, and that's what we do. And it's amazing because you can actually tell what the market is going to do. There are thousands of people out there who are going to tell you nobody can forecast the market. Well, they're talking from their experience. What they're saying to you is, I cannot forecast the market, that they cannot forecast the market. That's what they're telling you. And they believe that because they can do it, nobody can do it. Well, it's doable. And I am telling you it's doable because I can do it. I've been showing you this on a daily basis. I can do it. And that means you can do it because there are specific rules, there are specific patterns, and there are specific things that are teachable, learnable, and it means every single one of you can do it. Don't listen to those fake gurus who are telling you it's not possible, that the market is random and nobody knows it, and blah, blah, blah. It means they're telling you they're ignorant of what the market is doing. Thank you. I know you're ignorant about it. Maybe you'll come take my course and learn. You can tell him that. Next time they tell you, hey, I know the guy who can teach you to forecast the market, right? So go take his course and then come back and you'll probably be able to help other people. I listened to one guru says, hey, 80% of you will lose. Even if I teach you, 80% of you will still lose. So come take my course for $195. I said, no. If you are teaching people and 80% of them are still going to be losers, stop teaching them. Imagine you're going to school and the teacher tells you, hey, we're going to teach you. 80% of you will never pass the test. You want to go to that school? Anybody, give me a yes if you're still going to that school. Thank you. You're funny, right? Yeah, exactly. And that's what he's saying to people, and they go and they buy the course. He's saying 80% of you will never succeed, and they still go and buy it. Please, what you're teaching people, you're telling them in advance they're going to fail, and they still come. No. We will teach you how to do it the right way. We cannot guarantee you that every single one of you will be super successful. That will depend on your talent, your ability, your time, your finance, your ability to handle risk, and a lot of other factors in life. But we will teach you the right way. And if you have the time and you have the ability and you have the talent and you have the skill and you have everything else, capital and everything to trade, you will be successful. That's it. If you're going to a teacher who's telling you, hey, I'll teach you, but you'll fail, tell him, thank you. No, not interested. Right? So, okay, guys, I think this one is 21 minutes, too long. I'll stop the guys on YouTube. I know they may be angry at me. We could still take some questions after we close all the recording. Let me stop the live one here.